Well, good morning, everyone. Welcome to our Monday morning trading room. Hope you had a nice weekend. They're always too short, aren't they? All right. Here we are now with the NASDAQ. And just taking a look here at Friday's session, we did see the market. It was spent most of the time in a sideways channel, except for a short period during the afternoon where there was a little bit of a decline. After that, the market just consolidated again, moving in this sideways trading range. From where they left off to where we're opening, there is a small upside gap. Not quite sure whether or not the market's going to try to fill that gap. It's just a small gap. I'm already in the December contract. The September contract will be expiring here over the next, well, around the middle of the week. So over the next few days, we're going to see more more volume enter the December contract. Usually around these rollover periods, the market can get a little bit choppy like this, a little bit sideways. And that's very much what we're looking at right now. A little bit of a rally up. And more of the back and forth. All right, I think the best course of action here is just to give them a little bit of time to settle in. Oh, here we go. Things off to a slightly more bearish start, maybe, as we break the low of the morning or set a new low of the morning. We're kind of toward the bottom end here of Friday's trading range. And that could result in some pushback. All right, so it looks as though the sellers are going to try to move the market lower here this morning. Hey, way to go, Mark. Mark taking advantage of a pre-market late filter entry signal. Oh, must have been one of these back here just before the market opening. He says, I've managed to hit my profit target on this nice little move lower. Well done. I'll put that back on the shelf for now. Yeah, I bet it was. Mark says it was a lesson in patience, I'm sure. Well, we're moving lower, no doubt about it. I'm looking for maybe a little bit of a pullback to give me a better entry. The problem right now doesn't seem so much the direction. The direction does seem to be down. Rather, the problem seems to be where can I get on board? Now, we do have these discretionary signals that we can do, and this one seems to be giving me a second push opportunity. I pretty much have to risk it to the hard edge, and that's what these discretionary signals are for. They're here to allow you to get on board a trade that seems to be trending well or establishing a trend, but you haven't really got a good follow-up signal to take advantage of. Now you're going to see the problem with these types of signals versus the higher probability signals is that the challenge is going to be covering the position. You know, where do I place my stop? Sometimes the way the trade sets up, there's just not a lot of room or a lot of structure, I should say, for your stop placement. That makes things a whole lot more difficult. So far, the trend holding just, oh, there we go, a little bit of traction on the trade now. All right, I'm going to look at taking this trade to break even. I'll employ the ATR. Okay, well, I got tagged there on the small reverse. Oh, don't tell me I got tagged too quick. Oh, I did too. Oh, nope, maybe not. We're kind of entering a bit of a choppy phase here now. Although the Geiger counter needle is red, it looks like we're getting a little bit of a pullback. Well, I certainly hope that that move out of the open was not the move of the day. Yeah, Mark adding a couple of comments here. He's pointing out that the market is getting quite a ways away from the hard edge. The trading band getting rather broad here when it will be different for different markets, but generally for the NASDAQ, if the trading band starts to get about 40 or 50 ticks broad, and remember with the NASDAQ, there's 4 ticks per point. So we're looking anywhere around 10 to 12, 13 ticks or points. The market will be inclined to make a little bit of a pullback. And speaking of which, we actually have now a 2-3-2 type setup, which I will demonstrate for you. And perhaps I'll enter above this last swing high. Now the 2-3-2 is just a very simple way to try to time your counter trend trades a little bit better. You're going to get these number 2 signals cropping up from time to time. Just as the market tries to get some footing one way or another, you're going to get this number 2 signal. What will happen sometimes is that you'll get the hard edge bounce, the number 3 signal, but there will be no follow through. And again, it has to do with the market context. It has to do with the fact that the trading band is getting broad, and now all of a sudden you can almost see the momentum starting to fade out of the market, starting to wane. And then we come back with another number 2 signal. Now, this did not print as a number 2 signal, and probably because there were too many bars from here to here, this being the low, the retest. That does not, however, negate it as a number 2 signal. So we have the 2, the 3, then the failure, and the number 2, and it comes back with yet another buy. The target for the trade here is the hard edge, and it looks like we've just snuck up there a little. Oh, nicely done, Mark. Mark says he took another late filter entry. He says, now my day is done. Yeah, those late filter entry signals here on the Falcon, very reliable. So probably one of these two in here. Market drifting down to the profit target, providing a trend change signal and another late filter entry signal, but now to the long side for the buyers. All right, we'll see if the trade doesn't give me one more push up, and then I can try to adjust my stops here a little bit. In fact, I'll bring my break even back toward the hard edge now. This little rally here is going to be a big deal. We have to get above the hard edge if this trade is going to have any chance at all. Now you can take profit on target, we've hit our high probability target right here. I'm trying to squeak it out to the next resistance line. Oh, and they're going to tag me again. Stinkers. Yes, they did. Okay, we're going to see a bigger retest now that we're into the hard edge. Whenever we encounter the hard edge of the trading band, we should anticipate a reaction. So we're going to see now whether the Eagle and the Raptor are going to be able to recover the downtrend, or if in fact they're going to rally and continue higher. We almost have this market kind of boxed in right now. We've breached some of these little prior swing highs, and like I said, you can almost see the momentum starting to shift, but it's not for certain that the sellers are out of it. Here's the hard edge bounce, here's the signal. In fact, if you were just looking to take profit on target, you're almost there, and the market should continue low enough to find your profit objective. Now you could also do an OCO order here, and we could buy a break above the high. We could certainly sell a break. We'll see if we get a flinch here. There we go. So we got the market kind of confirming this low here, so we could sell a break below that low, or if you're more comfortable with it, you could sell a break below the low of the morning. They might be favoring a move up. And that, once again, is going to confirm this is now the retest of the extreme. So here we're actually going to produce a rule of 3 signal on the Eagle, but we're only going to get 2 signals. Usually we get 3 signals. This case we're only going to get 2, but it is still a rule of 3. What you would have to do, we don't have the signal just yet, but I'm going to assume the signal is going to print above the high of the current bar. you'd probably have to set it up something like that. If in fact they will continue lower. Or pardon me, higher. Oh gosh, give me a couple of days off and I'm getting everything mixed up. We could squeeze this a little bit harder if you wanted. We could do it a little bit like that. You don't want to get too tight because it's not beyond the market to break these swing highs and lows by a tick or two and then just as quickly reverse on themselves. But we've got a serious consolidation going on here. Geiger counter going green for us, so we might see a little bit of a bullish push. Maybe. You just have to say that, something like that, and then you'll watch the market reverse. The way they're consolidating here and moving sideways, if they move lower, it could be a brisk move lower, but I would actually favor a move higher. All right, well, there we go. We got the #1 signal, and it coincided with the OCO order that I had set up. I'm going to get a stop and play here. And we'll see now whether or not they can take out the low of the day, which would be the next objective, obviously, for the sellers. If they're going to continue to rally the market, they've got to take out the low. Oh, hit the break even. Let's get the trade down to break even now. Come on, don't, oh, darn it. Okay, have it your way. I'm wondering whether I should try to follow up with one of these discretionary orders. Broker will be happy. these little $5 trades, adds to his commission. Well, we essentially have the same scenario as before. The market's sideways, it's congested. We could do the OCO again. Could throw in a sell order down here. I think the buy order was up here. And we could just wait it out. That is a perfectly acceptable strategy. In fact, if I'm going to do that, I may wait until the market breaches this high here. That's 75.36, and we have the low here, and there you go. The market in this sideways range. We can wait for a new trend to establish. It does appear, though, that since the buyers are holding these lows, that maybe, just maybe, they're going to be the ones in charge here in a moment. We now have a proper rule of three signal here on the Eagle. So the Eagle is looking more bullish. Trend mode kind of winding down, and trade forecasts are saying we're moving into scalp mode. So I think we're seeing some of that scalping environment drift into the market at this point. The hawk turning bullish now. We have the first micro-macro cross signal right here. The Falcon also with its trend change signal. So these two tools already bullish. The Eagle with its counter trend signal. The Raptor, surprisingly, a little bit more neutral than the other three. You could call this an early cloud crossover, but really the clouds, I would say, are too neutral at this point. A second push entry is not a bad way to go when the market is sideways like this. And all a second push entry means is we allow the signal to engage, and then we wait for it to react, and we would use that bar, that reaction bar, now as our signal bar. And what that does is it keeps you from trying to predict what the market will do. It makes you a little bit more reactionary in your trading. So you'll get filled here, but only if the momentum is there to fill you. It's a great strategy to help keep you on the right side of the market. All right, here we go. Oh, they did fill it to the short side, and as anticipated, there was some follow through with that. And let's see what they can do. Okay, we got the break even. I'll move now into my ATR stops. And maybe, just maybe, no! Oh, no. Oh, darn it. Got another break even tag. Oh, well. And it was looking so promising there for a moment. This is rare here on the Hawk, that the first micro macro cross here did not work out. That is very rare. The failed buy on the first micro macro cross should give you some confidence to do the reverse, to sell the first micro macro cross here lower. If this one, well, this one has hit its profit target, but I was going to say if this one also failed, then that should make your spidey senses start to tingle and say, ooh, there's something not right with the market today. Because the first micro macro cross signal, both higher and lower, are very high probability signals. Like they'll work 80% of the time or more. So if you get those signals, first one failing to the upside, then one failing to the downside, then you really need to set up and take notice, because something may not be quite right. All right, more bullishness coming into the market. You can see here the Geiger counter turning green. The Falcon already working a trend change signal. In fact, we have the early trend change signal. Here the Raptor now with the number 2 signal and a second push opportunity. Not the best looking signal here, folks, but I don't have the 232 just yet. I do have kind of an early sell here, so this would kind of be the hard edge bounce. No, it's not gonna go, not yet. Okay, I'm gonna, you know what? I'm gonna scrub that trade. I don't feel like pressing my luck too much just yet. This signal right here is a number 3 signal. It must have come up just a tick short of the hard edge. This is why it's important for you to be able to identify the signals apart from the prompts, because if the programming has to meet the programming requirements exactly. So if you have a situation like this where you're just a tick short of the hard edge, it's not going to print as a number 3, and yet that's exactly what it is. It is a number 3 signal. And here now we have another first micro macro cross lower on the hawk, so good opportunity to sell there. Another trend change signal here on the falcon, and that coincides with this discretionary signal that we have here on the raptor. All three of which should work out. Geiger counter needle again going red here, so that's encouraging. So if you're looking just for a place to get back on board, you could look at one of these discretionary signals that come up. Right now, just got the warning dots though on that follow-up one. Oh, sorry, I was a little bit late here. I was going to show you this discretionary signal right here, just as a place that you could re-enter the trade. The discretionary signals have all the elements of the high probability signals in that all the signal parameters are met. It's just that it doesn't occur near a hard edge or off of a cloud crossover, which tends to be a higher probability signal. But when you have a market that seems to be trending, then these discretion, and you've missed, say you missed the hard edge bounce here, and you're thinking, oh no, I missed the hard edge bounce. Where do I get in? Well, these discretionary signals, these follow-up signals, are a great place to get back on board if you deem the conditions to be right. And what conditions are those? Well, the market should be trending, obviously. If you're using the Geiger counter and your Geiger counter is turned red, well, then that would be a good confirmation that perhaps we're going to get a little bit of a short-term move lower. And it almost is looking like the buyers may be getting some footing again. All right, so a lot of our tools getting a little bit more bullish. The hawk here now with the first micro macro cross, a macro pullback, and a 4-arrow consolidation all kind of blurring together there. The falcon with a trend change. The Raptor with a really quick and drawn out number 2 signal, which did not print because once again it was printing too far away from the extreme price, which is the low. So we're back into the hard edge. We have another hard edge sell, and we have a second push opportunity on this one. Actually, structure-wise, this one isn't too terrible. We are able to risk the trade here above these swing highs, which seem to coincide with the low of opening range. And here we go again with this whole 2-3-2 type setup. I may do an OCO again. So I'll look to buy above here. I'll look to short below here. I know I'm doing a lot of OCO orders lately. It's not intentional. It just, when the market kind of gives me these signals and no follow through, then it seems like a good opportunity to bracket. And you can see here we have the hard edge bounce, the number 3, the number 2 signal into the hard edge. Here we come with yet another hard edge bounce. And somewhere through here, we should expect to see some sort of follow through. All right, they popped me out, so I'm just going to resell that and throw my stop back up here. And see whether or not they can get back down toward these lows, or if this is just going to be a fake break. The Geiger counter is red, so that's encouraging. But so far, there's not much momentum with that breakout, which is not very encouraging. All right, here now the number 1 signal, which is the in sync signal. And I'm going to sneak my break even right down at the low of this bar. So the next push lower I'll take the break even if I can get it. Come on. Okay, let's see if we got any follow through now. You can do it. And the reason I'm going to break even is because of these lows right here. This may turn out to be a test of the extreme. The market's just been too much sideways. All right, well, we'll see here in a moment whether I was too quick with my stops again. Or whether the break even was not a bad way to go. They're trying to slip a little lower here, it seems, but not getting much traction just yet. All right, I'm going to look at this counter trend signal based primarily on the Geiger counter, the fact that we've made a test of the extreme. Oh, did they slip me? Oh, they did too. Look at that. That's a problem today too. We're getting some nasty slippage. Well, not nasty. It's the NASDAQ. I'm getting slipped a couple of ticks at worst. But it's not, we don't usually see the NASDAQ slipping. Okay, hit the break even. Here we go, the big test now. you know, now that the buyers seem to be getting some traction, a retest here at the low of the opening range is very likely. If you wanted, you could even stretch it here to the next support zone. Um, this is a very doable target, I think, for the buyers, providing, of course, I can ride out this swing. After that, well, the market did start trading up here around the 75.66 zone. So maybe even a move back here to 75.42. Okay, maybe, just maybe, they're going to let me ride out this swing. Oh gosh, they're just, it's brutal. Come on, buyers. Give me just one little push here. We'll help you out. Sometimes you can move the market with your mouse. Just push it higher. Nope, not yet. All right. Well, if the buyers are going to continue higher here, or try to, we should produce a number one signal. But I am starting to think we've maybe seen the move of the day, and that was lower. Ooh, Phil is having some slippage problems here. Phil's asking, what is your data source? I'm using Kinetics data feed. Phil says, slippage seems to happen to me more often than not lately. Nasty slippage is an ideal term. The reason I ask is I had CQG data, and when my Ninja 7 was overloaded by higher volume, I cleaned out my PC, and today Ninja 7 is not responding correctly. Slippage is terrible. I would talk to my broker about it, And in the meantime, you may want to employ the stop limit order. Now, the stop limit order is just like a stop order, except you're going to be able to limit your slippage here. So we're going to produce a number 1 signal here shortly. Oh, maybe. The Hawk, the Falcon, the Eagle, all still fairly neutral. Well, here we are again in this bit of a sideways mess. And I don't know, should we try yet one more OCO order? The buy order is easy enough. It's going to go above here. The sell order, well, I'll throw a just in case order down here. Ideally, I'd like to bring it in up here somewhere, but not yet. Everything is just so neutral. Okay, I've got kind of a double bottom here now, so I'm going to bring my OCO up. There we go. Oh, got to get my stop enabled. All right, this is, well, it's about as risky as the other ones have been. A very astute comment here from Mark. Might get the old upwards creep from here. Yeah, maybe. There it is. There it goes right there. He says, probably sideways for a while, like eating a Tootsie Roll. The world may never know. All right, a little bit of selling pressure. Last chance. Well, and so far, still no love from the market. If they end up, let's see, we got a little bit of a trend line going on here, kind of highlighting the congestion. We're wedging up a little. If on the off chance the market breaks down here below 75.03, they should try to recover toward the lows. But then again, they may just be happy to continue back and forth here. Okay, so here we go. There's that stumbling block, 75.03. Let's see what they got. Still nothing. Well, that's not what I wanted to see, that's for sure. Half of the challenge here will just be hanging on long enough. Got a 50-50 chance on this trade. You see these blocks of selling keep going through here. All right, there's 75.03 again. Let's see whether they manage to get below there this time. All right, well, they're trying to get below there. Come on, you can do it. All right, I'm going to bring my break even up here. So if they give me another push lower, I'll take a look at the possible break even. Well, here we go, back in this sideways mess. Gosh, just, I think if I get another move lower here, I think I'm going to bring my stops in because things are starting to look a little bit too aggressive for me. The sellers have had their chance. They've tried to move the market lower, well, here, here, and here, unsuccessfully. All right, there we go. I'm going to go with my stops above this swing now. If the buyers can't get it together at this point, or pardon me, sellers can't get it together at this point, then I think I will look at taking the early stop out. And in fact, I may even get ready with the bar high low. All right, there we go. Bar high low it is. Last chance. Really putting the squeeze on the trade at this point. Either the buyers or the sellers are going to come through here and probably move the market, at least short term. All right, I may even force the trade to break even at this point. Oh, if I can get it. There we go. All right, here we go. Oh, another break-even trade. Death by 1,000 paper cuts. Well, there's just no follow-through. Look at every single chart. Look at the congestion. Sorry, Dan, I got to your question a little bit late here, but I hope I answered it for you. Dan was asking, when would you consider moving your stop, or would you? It's always tricky when the market is sideways like this. There's always a danger that you're gonna, for me personally, my biggest, or one of my biggest flaws as a trader is very often I will tweak myself out of a perfectly good trade. And you know, that's why a lot of times I will just rely on the risk model. And if I set up the trade, let's say I took this number one signal, I set up the trade, I know I can afford this risk. I know I can afford the $400. So if I get stopped out, okay, it was unpleasant and everything, but I haven't lost more than I can afford. Generally speaking, for stop movement, I like to keep my stops 2 swings back. And I'm not talking micro swings, you know, I'm not talking like, oh, that's swing 1, that's swing 2. No, I'm talking about real swings. So this would be swing 1, this would be swing 2, so my stop would go there. If I'm anxious on the trade, well, then I'll bring my stop in a little bit sooner. Yeah, and you can see here, I probably did tweak myself out of a trade. But generally speaking, if you stay 2 swings back, you'll probably stay in the market for a very long time. Because it's not unusual for the market to challenge the prior swing, the first swing, but it's really unusual for it to go 2 swings deep. And the sidewaysness continues. You know, since we haven't seen a whole lot of momentum to the downside, I would probably favor a move higher at this point. I would not be opposed to a buy signal. All right, looks like I was not the only one thinking long, because there goes the market short. Well, that was a very quick little move lower, and again, no follow through. Well, it's really starting to wind down here, especially as we get closer toward the lunch hour. We might see, I don't know, I was going to say we might see another move up. right, well, the Geiger counter is getting a little bit green, so there's some bullishness coming back. Oh, Mark's going out on a limb. He says we'll see 75.45 before the day's out. And there they go. Or not. All right, gang. If you're going to hang out the rest of the day here, I think we can anticipate a little bit of a sideways consolidation going on. The market has made a substantial move lower. I don't know, maybe Mark's right, 75.45. That's a pretty big move still, but oh, 75.45. Sorry, I misread. Yes, Mark's thinking bullish for whatever reason. I was thinking 74.54. Darn dyslexia. All right. I would anticipate the market to consolidate here a little bit. Maybe a move back, certainly to this where we've been here around the 75. Certainly 75.02, 75.19 even does not seem out of the realm of possibility. 75.42 is another support zone up there. But overall, the trend is still down. So you could wait for the pullback or something resembling a pullback and then just look at shorting opportunities. But I think we're going to see the market kind of move back and forth here. So I would not be opposed to a buy signal as should one develop. Okay, well, I guess I'll see you again tomorrow. We'll talk at you then. Bye for now.